You're about to witness 25 documented trading disasters that reveal the dark psychology of market failure. These accounts are based on over 500 real cases from court records, regulatory filings, and behavioral finance research. While we've protected individual identities to focus on the lessons rather than the persons, every psychological pattern you're about to see is painfully real and could happen to anyone who enters the market unprepared. From a Buddhist monk who gambled temple donations, to a billionaire who livestreamed his own destruction, each thought they were different, each learned the same lesson. In trading, you don't battle the market, you battle yourself. And when you hear case number 7, you'll understand why the market's greatest edge isn't intelligence. It's knowing when to get out of the water. Welcome to Trading Psychology Stick, where we study the minds that lost to the markets so yours doesn't have to. Quick reminder, this is psychological education based on documented patterns, not financial advice. Consider this your behavioral mirror, not your trading manual. Tire 5, Shallow Water Drownings, The Rookie Disasters. Case 25, The Temple's Sacred Gamble. Psychological pattern, Sacred Money, Bias. Location, Southeast Asia, year, 2020s. In the calm waters of a major Asian city, a Buddhist monk discovered Forex trading. This spiritual leader wasn't gambling in his mind. He was multiplying Buddha's money for temple renovations. Here's the psychology. When money feels sacred or purposeful, we take bigger risks. The monk turned $30,000 in donations into $50,000 in 1 month. The temple celebrated. But sacred money drowns just as fast as sinful money. A sudden currency surge created a tsunami in his account. 3 days, everything gone. Plus $50,000 borrowed from private lenders for Buddha's work. The centuries-old temple's reputation was destroyed. According to local reports, the monk now works in construction, learning the hardest lesson. The market doesn't care about your intentions. Ever traded with money meant for something important? That's sacred money bias drowning you. Case 24, Manifesting Margin Calls. Psychological pattern, social proof fallacy. An Instagram influencer with 250,000 followers built her brand teaching abundance mindset trading. She posted screenshots of profits daily. Students paid $500 for her spiritual trading course. But investigations revealed every screenshot came from demo accounts. The influencer believed success was just confidence. When students started losing, she created a $10,000 inner circle and used that money to trade for real. The crypto flash crash of late 2024 revealed everything. Her livestream showed $200,000 vanishing while she chanted affirmations. According to online reports, 3,000 students lost over $2 million total. She disappeared from social media, but you can't manifest your way out of margin calls. Still following trading gurus? Let's see what happens when real professionals enter these waters. Case 23, The Pilot's Deadly Descent. Psychological pattern, expert transfer delusion. A commercial airline captain with 20 years experience applied aviation discipline to oil futures trading, checklists, risk protocols, safety systems. He even traded from the cockpit using in-flight Wi-Fi during long hauls. Here's the delusion. Expertise doesn't transfer between domains. Flying requires following rules. Markets require breaking them. Court documents show he was monitoring a $400,000 oil short during landing procedures when OPEC announced surprise production cuts. By touchdown, his retirement fund was gone. Aviation authorities discovered he'd been trading while responsible for passenger safety. Now grounded permanently, he teaches about addiction at pilot training centers. The irony cuts deep. He could navigate storms at 500 mistasta but couldn't navigate a simple futures contract. Think your professional skills make you a better trader? This next story shows otherwise. Case 22, Inherited Wealth Syndrome. Psychological pattern, inheritance entitlement. Location, Eastern Europe, year 2024. The daughter of a sanctioned oligarch inherited $50 million in offshore accounts. At 24, she built a high-tech trading floor to prove she wasn't just living off family money. The psychology is brutal. Inherited wealth feels infinite, so risks feel minimal. She hired former Goldman Sachs traders, started conservative, then leveraged heavily into emerging markets. Because when you've never experienced poverty, you can't imagine it. According to financial investigations, a single currency crisis destroyed her. 10-to-1 leverage on a political sure thing. She removed stop losses, certain the situation would reverse. By her 25th birthday, $45 million had evaporated. The remaining funds were frozen by international sanctions. Recent reports indicate she now teaches languages in the Middle East. Her luxury goods sold at auction. Generational wealth became a generational warning in 12 months. From riches to rags, all backgrounds drown the same. Watch this firefighter's final alarm. Case 21, fighting fires, feeding the flames. Psychological pattern, desperation, acceleration, location, American Midwest. Year 2024. A veteran firefighter with 30 years of service faced retirement with bad knees, damaged lungs, and a pension that needed to work harder. A colleague showed him safe option strategies during injury recovery. Here's how desperation drowns you. Small wins make you hungry. He made 2,000 monthly selling covered calls, then discovered naked puts with unlimited risk disguised as income generation. His body could handle fire. His mind couldn't handle greed. The regional banking crisis of early 2024 revealed his positions. He had sold puts on every failing institution, collecting easy premiums. In 48 hours, his $380,000 pension became negative $50,000. The hero who ran into burning buildings couldn't escape this financial fire. Public records show ongoing litigation with his brokerage. At 57, he works overnight retail shifts. Sometimes the bravest in one arena are the weakest in another. Notice something? They all thought the rules didn't apply to them. The monk had dharma. The pilot had discipline. The oligarch's daughter had birthright. This is exceptional thinking, trading's first deadly sin. But watch what happens when the water gets deeper. Tier 4, the Riptide Zone, professional failures. Case 20, the Quant's Miscalculation. Psychological pattern, intelligence hubris. Location, American Northeast. Year 2024. A mathematics professor with 3 advanced degrees from a top university developed algorithms that predicted market inefficiencies. She mortgaged her home for $500,000 to fund her perfect system. Here's the trap. Intelligence becomes arrogance. Her system showed 20 years of flawless backtests, 6 months of real profits, sharp ratios above 3. Then the equations met reality. Her strategy got crowded. The August 2024 Quant quake saw dozens of similar algorithms unwind simultaneously. The woman who solved partial differential equations couldn't solve for human behavior. Her stop losses triggered a cascade, turning academic brilliance into bankruptcy. IQ doesn't equal trading success. Sometimes it guarantees failure. Speaking of misplaced confidence. Case 19. The janitor who said, Number, psychological pattern, wisdom through humility. Location, New York City. Year, ongoing. A maintenance worker cleaned trading floors at a major investment bank for 20 years. Traders mocked him, threw tips, shared can't-lose trades. One intoxicated trader offered a $50,000 loan for a guaranteed play. He said no. That trader blew up the next week, lost everything on the same sure thing. Meanwhile, the janitor kept cleaning, kept saving, kept saying no. His savings account grew slowly, but never shrank. His dignity remained priceless. Today he owns a small apartment, sends his children to college, sleeps peacefully. Half the traders he cleaned up after are broke, divorced, or deceased. Sometimes the smartest trade is not trading at all. Not everyone has this wisdom. Meet someone who won the lottery twice and lost it all once. Case 18. The lottery winner's curse. Psychological pattern, Windfall syndrome. Location, Latin America. Year, 2023. A factory worker won $5.2 million in the national lottery. At 34, she quit immediately, determined to multiply her miracle through trading. And windfall psychology is vicious. Unearned money feels infinite. She learned trading from YouTube, started with 1 million. Her thesis was that her country's currency was overvalued. She was right. Her timing was catastrophically wrong. She shorted the peso with massive leverage. It strengthened for 3 months, liquidating her positions. 3 days after her forced exit, exactly as she predicted, the currency crashed 20%. The market agreed with her analysis but destroyed her anyway. She returned to the factory. Her coworkers know she won millions. They watch her clock in daily, a walking reminder. Being right means nothing if you're early, and early equals wrong. From lottery tickets to streaming disasters, this next story will haunt you. Case 17, the streaming catastrophe. Psychological pattern, crowd psychosis. Location, North America. Year, 2025. A popular gaming streamer turned trading into performance art. His 50,000 viewers voted on every trade. Democracy meets degeneracy. He built $200,000 from donations and community wins. Here's how crowds kill. Individual wisdom becomes collective stupidity. Chat voted for increasingly risky plays. The streamer, addicted to viewer praise, couldn't say no. His identity merged with his profit and loss. The final stream came when chat voted all in Tesla, puts before earnings. He hesitated. Chat spammed. Donations poured in with messages pushing him to act. He clicked submit. Tesla beat earnings by 50%. $200,000 vanished in one candle. Chat exploded with memes and shock. Some laughed, some cried. His stream ended forever. When you trade for others' approval, everyone drowns together. Think that's dark? Wait until you see what happens when medical professionals trade life and death. Case 16, the ICU nightmare. Psychological pattern, adrenaline addiction. Location, Canada. Year, 2023. An ICU nurse discovered Asian market volatility during night shifts. Between dying patients and live positions, she found trading delivered the same adrenaline as medical emergencies. Addiction psychology is simple. You need bigger hits. She progressed from Forex to futures to options. She'd check positions between critical procedures. The hospital Wi-Fi became her dealer. One night, managing a cardiac arrest and a margin call simultaneously, her brain split. Instead of closing a losing yen trade, she doubled it. The patient survived. Her account flatlined. Medical board records show $65,000 in savings lost, and nursing license suspended after investigation. She now works at vaccination clinics, banned from critical care. When you're addicted to adrenaline, you'll find it anywhere, even if it kills you. Let me ask you something uncomfortable. Which story is yours? The overconfident professional? The desperate pensioner? The adrenaline junkie? We all see ourselves in this ocean. The question is, will you get out before the water gets deeper? Tier 3. Swimming with sharks. High minus stakes individuals. Case 15. The trader who walked away. Psychological pattern, ego transcendence. Location, Chicago. Year, 2024. A portfolio manager ran $500 million at a top hedge fund by age 26. Corner office, 7-figure bonuses, media coverage. Then she noticed something. Every successful colleague was miserable, divorced, addicted, dead inside. Here's rare wisdom. She ran the numbers on happiness like a trade. The ROI was negative. In January 2024, at peak earnings, she did the impossible. She quit. Colleagues called her insane. You'll regret this forever. Today she operates a small farm in New Zealand, teaches financial literacy to locals. Her social media shows sunsets, not screenshots. Her millions remain intact because she mastered the hardest trade. Selling your ego at the top. She's the only winner on this list. Not because she made the most, but because she kept it. Sometimes the best swimmers know when to leave the ocean. Not everyone has this wisdom. Some seek revenge in the waves. Case 14. Trading for revenge, drowning in rage. Psychological pattern, emotional hijacking. A successful lawyer's wife left him for his business partner. The divorce settlement, $2 million. His plan, turn it into $20 million to show her what she lost. Revenge psychology corrupts everything. Every trade became a message. He shorted his ex-wife's new husband's company, posted positions publicly for her to see, traded with pure hatred, not logic. The market doesn't care about your revenge fantasies. Emotional trades lost consistently. Desperate to win, he leveraged everything on bank shorts before elections. The banks rallied 30% on results. $2 million became zero. The apartment was foreclosed. The revenge consumed only him. Court records show his ex-wife never even saw his posts. He now teaches meditation, finally at peace. When you trade for revenge, you only destroy yourself. Emotions kill traders, but what about those who see through the scam? Case 13. The Discord Detective. Psychological pattern, productive paranoia. Location, Southeast Asia. Year, 2024. A computer science student joined a 50,000-member trading Discord. Unlike others, the 22-year-old coder built a bot, tracking moderators' real trades. His discovery? Mods bought before alerts, sold into member buying, classic pump and dump. But his paranoia became profit. He started shorting their picks after pumps. For 3 months, he made $30,000 betting against the scammers. Then he went nuclear, posted everything, screenshots, blockchain analysis, voice recordings. The server imploded. Regulatory investigations began. The plot twist? He returned profits to scammed members he could verify. Now he runs legitimate trading education. Sometimes the best trade is betting against the criminals. Heroes are rare in this ocean. Most drown like this gaming champion. Case 12. Game over for real. Psychological pattern, game transfer delusion. Location, South Korea. Year, 2023. A top esports player earned $400,000 yearly dominating competitive gaming. The champion figured trading was another game to master. Quick reflexes, pattern recognition, emotional control. But markets aren't games. No respawns, no pause, no practice mode. His all-in-tournament mentality, perfect for gaming, became fatal for trading. He turned $50,000 into $200,000 on crypto. Sponsors noticed. Then came the collapse of a major token. $400,000 vanished in 48 hours, including borrowed sponsor money. Banned from esports for bringing disrepute, he now works food delivery. His streams get minimal viewers. Game over means different things when real money burns. Young phenoms crash hard. But what about those trying to save lives? Case 11. The Surgeon's Shaking Hands. Psychological pattern, desperation, distortion. Location, Australia. Year, 2024. A heart surgeon with perfect precision applied identical methodology to trading. Careful planning, risk assessment, flawless execution. For 2 years, his surgical approach yielded steady 20% returns. Then his daughter developed a rare condition. Insurance wouldn't cover experimental treatment. The steady surgeon suddenly needed money fast. Desperation destroys discipline. His careful plans became casino gambling on biotech stocks. One FDA rejection vaporized $800,000 meant for treatment. His hands, rock steady in operating rooms, now shake holding phones. Medical directories show he works locum shifts across the country, chasing payments. When desperation drives your trades, precision becomes poison. We're entering deeper water now. These aren't just losses. They're identities dissolving. $1,000,000 egos meeting $1,000,000,000 realities. If you're still watching, ask yourself, what would it take for you to walk away? Because these next swimmers couldn't answer that question. Tier 2. The deep sea pressure. Elite individual disasters. Case 10. The Grandmaster's Checkmate. Psychological pattern, strategic rigidity. Location, Eastern Europe. Year, 2023. A chess grandmaster with 30 years of competition declared, markets are just chess with money. He built algorithms based on chess strategies. For a year, they worked perfectly. Here's the fatal flaw. Chess has rules. Markets don't. When his first black swan appeared, he froze like facing an illegal move. His brain, wired for structured thinking, couldn't process chaos. $2 million evaporated while he analyzed impossible price action. The grandmaster who calculated 20 moves ahead couldn't react to one unexpected candle. He now teaches chess to children, warning them, life isn't chess. Most games have no rules. Even grandmasters drown. But knowledge workers sink faster. Case 9, the code that killed. Psychological pattern, creator's blindness. Location, Asia Pacific, year 2023. A blockchain developer coded smart contracts for major DeFi protocols. She spotted arbitrage opportunities in her own code, built a bot to exploit them, turned $30,000 into $400,000. Creator's blindness is brutal. You can't see your own flaws. During a routine update, her bot's logic inverted, buying high, selling low. While she slept, it executed 10,000 backwards trades. She woke to negative $200,000. The cruel irony? She'd fixed identical bugs for others. Now bankrupt, she works for the same protocol her bot traded. They hired her because expensive mistakes make excellent teachers. Coders can build fortune and ruin. Old money faces the same fate. Case 8. The Aristocrat's Last Stand. Psychological pattern, privilege poisoning. Location, United Kingdom. Year, 2024. A member of nobility inherited vast estates and £10 million. He believed centuries of wealth management was genetic. He built a trading room in a medieval tower. Here's how privilege kills. It makes you believe you're special. He hired quantitative analysts, but overruled their warnings with aristocratic certainty. Leveraged ancient land for modern Forex trading. Brexit effects should have been predictable to British nobility. Instead, he bet on currency strength with 50-to-1 leverage. The pound crashed. Margin calls don't respect titles. The estate, held since the 1600s, was foreclosed in 2024. He now gives tours of his former home from staff quarters. Tourists document the riches to rags story. Nobility doesn't transfer to trading screens. But here's the twist. His middle-class son begged him not to trade, even offered to manage the money. The aristocrat refused advice from new money. That son bought the estate at auction. Sometimes the water drowns the proud first. Privilege can't protect you. But what about those seeking justice? Case 7. The Whistleblower's Perfect Storm. Psychological pattern, righteous risk-taking. Location, Eastern Europe. Year, 2023. A finance executive exposed massive fraud at her energy firm. Fired, blacklisted, threatened. She decided markets would deliver justice the courts wouldn't. Using inside knowledge of fraudulent positions, she built massive shorts through offshore accounts. Every fake earnings report strengthened her conviction. She wasn't gambling, she was certain. When authorities finally raided, the stock crashed 90%. Her $50,000 life savings became $3 million. But here's the beautiful part. She donated everything to fund whistleblower protection. Her bosses got prison. She got purpose. She now helps other whistleblowers navigate markets and law. Sometimes the best trades come from the worst experiences. Sometimes the ocean delivers justice. Justice is rare. Social media prophets usually just deliver pain. Case 6, the social media messiah's fall. Psychological pattern, audience capture. Location, United States. Year, 2225. An anonymous trader built 3 million followers sharing his wins. He turned $1,000 into $100,000 during meme stock mania, Gen Z's trading profit. Here's how audiences kill you. Their expectations become your reality. Every trade had to be bigger. Every win had to be public. He started believing the comments, started trading for likes, not profits. January 2025's biotech squeeze play went to zero on failed trials. The live stream showed $2.3 million evaporating. Comments turned from worship to hatred. Followers lost 50 million collectively. The anonymous prophet was revealed as a 23-year-old from Middle America, now $400,000 in debt. Federal investigations ongoing. His final stream, I believe my own hype. He works in construction now. When you trade for an audience, you perform your own execution. 5 souls remain, 5 warnings from the deepest trenches. These aren't just traders who lost money, these are humans who lost themselves. If you've made it this far, you're about to see why some losses echo forever. Tier 1, Legends of the Abyss, The Deepest Drownings. Case 5, The Billionaire's Public Execution. Psychological pattern, performative destruction. Location, Japan. Year, 2020. A well-known Japanese entrepreneur and space enthusiast publicly shared his trading journey. According to his own social media posts, he lost 4.4 billion yen, approximately $41 million, during pandemic market volatility. He admitted to being blinded by virus-driven market swings and engaging in repeated short-term trading, something he wasn't familiar with. He expressed deep regret, wondering how many people that money could have helped. But he did something profound. He turned this public failure into education. He continued building businesses and teaching financial literacy. Sometimes the biggest losses create the biggest impact when shared honestly. Individual losses can inspire, but institutional failures cut deeper. Case 4, the charity's children. Psychological pattern, savior complex. Location, North America. Year, 2022. According to regulatory filings, a children's charity fund manager turned $10 million in donations into $50 million during the bull market. 300 sick children depended on her continued success. The savior complex is insidious. Good intentions justify any risk. She leveraged everything for more children saved. When biotech stocks crashed, she didn't cut losses. That would mean abandoning kids. 1 week, 50 million to zero. Treatment funding vanished. The downstream effects were tragic. Investigation records show the manager attempted self-harm, but survived. She now works minimum wage, giving everything to victims. This is why our list exists. When you trade with others' lives, drowning alone becomes impossible. Charity disasters haunt forever. Crime pays even less. Case 3, the flash crash architect. Psychological pattern, systemic sociopathy. Location, London. Year, 2010 to 2015. Navinder Singh Sarao traded from his parents' London bedroom, but moved trillions. The trader, later diagnosed with Asperger's syndrome, discovered how to profit from market microstructure. On May 6, 2010, his algorithms contributed to erasing $1 trillion in minutes. Pattern brain psychology. Markets were puzzles, not people's pensions. For 5 years, he made $70 million from his activities. The FBI caught him in 2015. Investigation revealed the twist. Wealth managers had scammed him of almost everything. The man who moved markets couldn't spot basic fraud. He received home confinement. Sometimes the ocean's biggest predators are also prey. Individual crashes are contained. But what about those who trade on others' misery? Case 2. The dark edge. Psychological pattern, predatory trading. Location, United States. Year, 2022 to 2023. A cybersecurity professional discovered the ultimate edge. Criminal forums discuss targets openly. Short companies before attacks. Profit from chaos. For 18 months, his predictions seemed genius. 100,000 became $3 million. He rationalized. Companies were already doomed, just capitalizing on inevitable. Federal authorities noticed patterns. Under surveillance, he made his biggest trade, shorting a hospital chain. But authorities prevented the attack. Stocks soared. Caught between confession and bankruptcy, he chose prison. Court records show 5 years federal time and lifetime trading ban. He teaches cybersecurity to inmates now. When your edge requires others suffering, you're already drowning. Crime doesn't pay. But what about those who try to predict nature itself? Case 1. The weather prophet's perfect storm. Psychological pattern, God complex. Location, United States. Year, 2024. A former government meteorologist left to trade weather derivatives. His climate models predicted agricultural yields perfectly. By 2023, his fund managed $2 billion. He was the oracle of agriculture. The God complex is trading's final boss, believing you can model chaos. He had everything: expertise, technology, capital. His algorithms incorporated centuries of data. He'd conquered randomness. Climate change made weather unprecedented. The summer 2024 polar vortex broke every agricultural market simultaneously. Historical models met non-historical weather. 1.4 billion vanished in 1 week. He returned to government work, earning a fraction of his former income. He learned what ancient sailors knew. The ocean doesn't care how well you map it. Chaos remains chaos, and chaos always wins. This tops our list because it represents ultimate hubris, a scientist believing he could outsmart nature. When the smartest person in the room loses everything to randomness, what hope do we have? The final surface. 25 souls entered the market ocean, each drowned in their own psychology. Sacred money bias, social proof, desperation, revenge, God complexes. But notice the pattern breakers, the fund manager who walked away, the student who exposed frauds, the whistleblower who found justice, the janitor who simply said no. They survived because they understood. You're not trading markets, you're trading yourself. Every chart reflects your fears. Every position reveals your ego. Every loss teaches what you refuse to learn. The ocean doesn't choose who drowns. We do. With every trade without stops, every position sized by emotion, every moment we forget, the market is not your enemy. You are. So before your next trade, ask yourself, are you swimming or sinking? Are you trading or gambling? Are you humble or heading for this list? Because in this ocean, confidence is concrete shoes. And the only edge that matters is knowing when to get out of the water. Share your thoughts below. Which psychological pattern resonates with you most? What's your plan to avoid these traps? Remember, you can be wrong and survive. You can't be leveraged and wrong. The ocean is patient. It can wait longer than you can swim.